All right, today we're diving into a company called Beta Drugs. It's a specialized oncology player that's been making some serious waves in investment circles. So what's all the buzz about? Let's get into it.
So here's how we're going to break it down. First, we'll look at how this company even got on people's radar. Then we'll unpack its secret sauce, its core strategy. We'll see how that strategy translates into 4 business pillars, check if the money and the numbers actually support the story, and finally, weigh its future against some pretty significant friction.
You see, this whole story, it doesn't start with a big press release or a fancy announcement. It actually starts with the curiosity of everyday investors. They saw something that made them lean in and take a much closer look. And this, right here, was the spark. When a big-name investor, a real ace in the game, quietly builds up a massive 12% stake in a small company nobody's heard of, well, that's like a giant flare going up in the middle of the night. It gets people asking questions, and it gets them digging for answers.
And when I say digging, I mean they literally started digging. People on investment forums began doing their own on-the-ground detective work. They were searching for Beta's products on pharmacy apps like 1mg, and what do you know? Dozens popped up. Some folks even went and visited the corporate office to make sure it was a real, legitimate operation. And it was.
All this activity, all this buzz, it all boils down to one single question. What on earth is so special about this little-known cancer drug company that's got both the big sharks and the determined retail investors so excited?
So, what did all that digging uncover? Well, once you peel back the first few layers, you find a really smart, really powerful strategy at the heart of this whole thing.
And the absolute key here is something called backward integration. Now that sounds complex, but all it really means is they make their own key raw materials in-house. Think about it. This is a game changer. They aren't dependent on outside suppliers, especially from China. They control their own supply chain, their own costs, and their own quality. Basically, they control their own destiny.
And they use that control to run this brilliant little playbook. It's a simple 4-step process. First, they spot a complex cancer drug that's about to lose its patent. Second, they race to develop the key raw material for it themselves, before anyone else. Third, they create the finished medicine. And fourth, bam! They launch it first in the Indian market and grab a huge chunk of the market before their competitors even get their shoes on. Okay, so that's the big idea. But how does that slick strategy actually turn into cold, hard cash? Let's look at the 4 ways they make their money.
You can see right away, their revenue is nicely spread out. They aren't a one-trick pony. The biggest piece of the pie comes from making drugs for other big pharma companies. That's about 39%. But right behind it, at 34%, is selling their own branded drugs right here in India. Then you've got exports and even selling those raw materials they make, which chips in a nice little slice too.
Let's talk about their own brand first. This is a huge focus for them. They've built up a network that covers over 70% of corporate hospitals in India. And for some of their drugs, they are already the #1 generic player in the entire country. Their goal? To be one of the top 3 biggest names in the Indian oncology market. Period.
The second pillar is making drugs for the giants. You've got massive companies like Zydus, Torrent, even Reliance, who want a piece of the oncology action. But building these hyper-specialized manufacturing plants is incredibly expensive and difficult. So what do? They hire Beta Drugs to do it for them. It's a massive vote of confidence in Beta's technical skills.
Now, pillar 3 is where things get really exciting. Exports. This is their next big growth engine. They are pushing hard into markets like Southeast Asia and Latin America. Just recently, they filed over 80 new applications to get their drugs approved in other countries. This is where a huge chunk of their future growth is going to come from.
And that brings us full circle to the 4th pillar, back to that secret sauce. Remember those raw materials, the APIs they make in-house? Well, they don't just use them for their own products. It's a business in itself. They sell these high-value ingredients to other drug companies, turning their biggest strategic advantage into yet another stream of revenue. It's just smart business.
Okay, the story sounds amazing. The strategy is sharp. But talk is cheap, right? Let's follow the money and see if the financial performance actually backs up all this promise.
You don't have to be a Wall Street analyst to see what's going on here. Just look at the company's own numbers. Whether you're looking at sales or earnings or profit, every single line is pointing up and to the right. It's a textbook picture of growth.
And when other investors started crunching the numbers themselves, what they found was just, wow. We're talking about an average sales growth of 31% over 3 years.
a solid return on equity around 20%, which means they're very profitable, and maybe most important of all, they have almost no debt. They're funding this explosive growth themselves.
Let's just pause on that one number for a second. 31%. An average sales growth of 31% year after year for 3 years. That is absolutely exceptional. That's the kind of number that signals a company is not just doing well, it's firing on all cylinders and taking over its market. This is what makes people sit up and pay attention.
The past looks incredible. The numbers are fantastic. But investing is always about the future. So let's look at what's next for Beta and some of the potential bumps in the road.
And let me tell you, they are not planning on slowing down. Management is publicly targeting continued growth of 30 to 35% a year. They're pushing for approvals to get into the highly regulated, highly lucrative European markets. They're expanding into Latin America. And they even bought a new facility to make themselves even less reliant on China. They're clearly thinking 5 steps ahead.
This all sounds incredible, almost too good to be true. But, and with small, fast-growing companies, there is always a but, there are some growing pains. And this is the friction. Take a look at this quote from an investor on that same forum. They tried for a month just to get in touch, to schedule a visit, and got nothing. Radio silence. No calls picked up, no emails returned. And sadly, this isn't an isolated incident.
And what you end up with is this really stark, almost jarring contrast. On one side, during their official conference calls, you have management pitching themselves as an investor-friendly company. But on the other side, you have the real-world experience of investors who feel completely ignored, leading them to say things like, "A management that does not care about an investor seldom prospers." Ouch.
So this leaves us with the ultimate dilemma, doesn't it? On one hand, you have this incredible business, a powerful growth engine with a brilliant strategy and fantastic numbers. But on the other hand, you've got this glaring communication gap, a real operational risk. And so the multi-million-dollar question for any investor is this. Is the opportunity here so compelling that you're willing to overlook the risk? That's the question you have to answer.